Hi, this is Yvonne, and I'm here with Harry Van Wy
Hello.
of Van Wy Tax Services, and he's going to talk to us a little bit this evening, or give us some answers to some questions we might have about taxes. Harry, thank you for coming by today. I really
certainly
appreciate
welcome.
it.
You're my pleasure.
I always have questions about taxes. It seems like the tax system changes every year. There's always something new, but we're going to start off with the basics.
That it does.
Harry, who has to pay taxes?
Everyone has to pay taxes if their income reaches a certain level. There are certain exemptions and deductions that keep people from paying taxes if their income doesn't reach that level. But everyone is liable for taxes if they have a certain, the prescribed amount of income. Age has no bearing. I get calls all the time. When can I stop filing taxes? I'm 80 years old. Can I stop now? And of course, age has no bearing on it. It's income.
Okay. All right then. Let's say, what happens if I don't file?
If you don't file and your income is such that you should, the IRS will, in all probability, know of that, because these W-2 forms that report our income, 1099 forms that report retirement income and interest and dividend income, all these forms are sent to the IRS, and we get our copies, but the IRS already has them. So they know what our income is pretty much already. So if we're at the threshold where we're liable to file and we don't, we'll get a letter from IRS saying, we're searching for your tax return and have not been able to find it.
Yes, indeed. Did you forget to mail that or what? Yeah. Now, each year we have that deadline, April 15th. April 15th, except for a couple of years ago when we had some bad weather or whatever, something came up and we had to, and they let us go for, I think, to the 17th or something like that. They gave us a couple of days on that, but it's normally April 15th.
Of course, you can always get an extension of time to file, and that's simply by sending in a form telling the IRS, I need more time. There's it's not a big issue. You can do it online or you can send in a paper form, and it will automatically give you until October 15th to file. It changes your due date from April 15th to October 15th. What it doesn't change, however, is if you owe money, April 15th is the due date for that money. Now, so if you send in this form for an extension to change to October 15th, they want their money April 15th. So you're supposed to send the money that you figure you're going to owe with this extension form. If you do not, and you owe money with your return October 15th, there'll be penalties for that. But your extension still will be good as long as IRS hasn't taken issue with it and they said, oh no, you owe us way too much and we're going to deny the extension. You seldom see that.
Yeah. Okay. I know every year there's something a little different about taxes, things that come up. They tweak it a little bit to make it a little more difficult for us to understand.
That they do.
Yes. And I know we have the Affordable Care Act this year. Tell us a little bit how that's going to affect our taxes.
Oh my goodness, the Affordable Care Act. That has turned me into the insurance police. I now must ask all of my clients that come in if they have or if they had insurance last year and how many months they didn't have it if they didn't. I need to know if they weren't covered for everyone on their tax return. So like a husband, a wife, and if they have any children, the children as dependents on that tax return. I've got to know that they've all got insurance. And if any one of them didn't, then there are penalties that come into play for failure to have that insurance. This past year, the returns I'm doing now, the 2014 returns will have a penalty if you didn't have the insurance. And going forward in 2015, the year that we're in now, the penalty even gets steeper. It's really not all that great last year for 2014. It's minimal, but 2015 it's a whole lot more.
It's going to be a big one. Wow.
Yeah, it's really made a change. I brought some notes here because this Affordable Care Act is quite something here. And let me tell you this. For 2014, the penalty for being without insurance is the greater of $95 per adult and $47.50 per child, up to a maximum of $285 per family, or 1% of household income that is over a certain filing threshold amount. You're exempt from this penalty if your total household income is below the threshold amounts. These being $10,150 for a single person, $13,050 for a head of household. That's a single person that has a dependent child. And $20,300 for a married couple filing jointly. Now those threshold amounts, if you didn't have insurance and your income is below those, then there won't be a penalty.
Okay.
But if your income is, and there's not a whole lot of that,
Yeah.
but if your income is above those and you don't have insurance, you will get a penalty for failure. To give you an example, I've made up an example here. Take a couple with 2 children who have no health insurance, and together they earn $50,000. Their penalty is the greater of the maximum $285 for a family, or 1% of their earnings over the married joint threshold, that being $20,300. Thus, you would figure it like this. You would take their $50,000 income, subtract the $20,300 threshold, that gives us an answer of $29,700. Then we would say 1% of that is $297. So that would be their penalty. We would compare that with the $285 max. Their penalty would be $297 for the year. Now, so that you know how much different it is going forward. For the current year we're in, 2015, the penalty for not having insurance is substantially increased. That $95 per adult penalty is now $325 per adult, and the 1% is now increased to 2% of household income. So in that same example where they just paid a $297 penalty, what would happen now in 2015? The husband would pay $325, the wife would pay $325, and each child would pay half of that, $162.50 apiece. $975 would be their penalty for not having health insurance in this little family example. Pretty hefty now, isn't it?
Yes, it is.
I know it.
Wow, so it's pretty important.
It's
that
important to get covered, yeah.
Yes,
and then going forward after that, 2016 it's greater yet, and 2017 is greater yet. Wow. Yeah.
Yes, indeed. So we encourage everybody out there to get some insurance.
Absolutely.
Now that's the biggie. That's the big addition.
That's
to
the big change.
Yeah,
the
that's
huge
the big
change. Yeah. Yeah.
Tell us a little bit about, well, just some basic changes that have come up, some things
Well,
that we
tell
need
you,
to watch.
really what happened to us right at the very end of the year, it was kind of comical in a way, because all of these so-called Bush tax cuts expired at the end of 2013. There's a whole lot of them. There were things like the education credits, tuition deductions. There was a deduction for teachers. These small credits, energy credits, if you would have bought some insulation or storm windows or doors. All of these things had deductions or credits had expired at the end of 2013. And what happened in my business is the software companies that prepare the software for us to do the taxes with, they had already sent out all their software. They send that out around Thanksgiving time, and then here comes December 27th, and the president signed, "We're bringing back the Bush tax cuts." So like 3 days to go for the year ends, all these Bush tax cuts came back in, which was good news. I mean, I'm happy that they did that. There was a lot of them that were big. There was the $1,000 per child tax credit for a child under the age of 17. That was brought back in. And so thankfully they were all brought back, but just for 1 year, for the year that we're doing now, 2014. So we'll see what the future brings. If they bring them back again for 2015, we just got to wait and see what our lawmakers do to us.
Yes, yes, indeed. And you have to keep up with all that.
We got to keep up with it, yeah.
Professional tax preparer.
We were all geared up with it as it was, and then the software companies were scrambling to make all these changes to bring them back and correct their software and get the new corrections out to us.
Okay, now as a professional, how do you keep up with all these things? Other than, they send things to you from time to time, but are there different ways?
Absolutely. It's a continuing education experience. I'm always going to classes and seminars, tax updates to stay current, because it always is changing. You got to stay current in this business, that's for sure. Yes, yeah. One of the big things, huge things that was changed right there at the very end of the year was for businesses that buy equipment, there's a deduction for that equipment that they can take rather than depreciate it.
Oh.
The IRS makes us depreciate equipment over its useful life. Like, say these desks and chairs have to be depreciated over a 7-year period. You can only take 1/7 every year for the next 7 years. Well, there was an exception to that, or a special ruling on that, where, and it's been in existence for years, it was part of the tax cuts, that businesses were allowed to deduct that amount up to a like $250,000 amount. So it was huge. And that was done away with. It was limited to only $25,000. They brought it back so the businesses could
flourish. Wow. Anything that we as taxpayers need to know this year? I mean, something that's come up that maybe everybody hasn't caught yet.
One thing that I could tell everyone there is that when you file your federal return, a married couple filing a return, it typically is most advantageous to file a joint return. Combine everything, combine the incomes, and then take your deductions, whatever it is, jointly on a return. However, here in Kentucky, that's not the case. In Kentucky, with the state return, it's the case for a federal return, that's the same no matter what state you're in. You want to file jointly. Typically, that's the way to go. There's exceptions. But in Kentucky here, we want to file a married filing separate return on our Kentucky state returns. And Kentucky does have provision for that on one form. On their one form, you do have the option of filing a separate return combined on this one form. So that usually will save money to file separately for Kentucky.
Okay. And so those are points that a professional like you would know. So it does behoove the public to use a professional who has all the information, or has a lot of information, a lot of updates, during the year.
It usually does. Just like I always say, I have a leak in my kitchen or something like that. I'm not going to get under that sink and fix it myself. I'm going to call the professional plumber.
Yes, indeed. What are you seeing as maybe the average refund this year?
That's hard to say. It really is hard.
I know.
I can tell you what I've seen. I really couldn't say what an average refund would be. I just did one just yesterday. The refund was $11,000. I've done a lot of refunds that are several $1,000s like that.
So there's some large ones out there.
There's some big ones out there.
Big refunds. Okay. So for those people out there who haven't had their taxes done yet, there could be big money waiting for you.
Yes, there certainly could be. There most certainly could be.
Yes. Now, for our refunds, how long is it taking to get a refund back this year?
This year, they're pretty on it. I've been getting reports from my clients that their refund is coming back to them a week after I've transmitted the return to IRS. So we asked the IRS to deposit the money into their bank. And I've asked my first bunch of clients that came in if they would give me a call and let me know when they got them. And those calls were coming in. We got our refund in a week. Okay. So I don't know that that'll sustain, but IRS has been pretty good at it.
Very good. Well, Harry, I know that you talk to a lot of people every day doing their taxes and whatever. And while chit-chatting, what are they doing with these refunds? Is this fun money this year? Or are we going to go get a big vacation?
Some are. Some are catching up on bills. Others are using it for vacation money. I don't know what they do.
That's always a lot of fun to get that money back and then to have to decide what to do with it.
It always is,
oh,
isn't it?
Gosh,
yes, it is.
Yes, indeed. I know, like you said, everyone needs to pay taxes. I mean, need to file their tax forms, get those out there in a timely fashion. Okay, and like you said, you can have extensions if you don't, but it's best to get them out there on time.
Yes, it is.
Yes, indeed. And to see a professional like Harry here to make sure that you don't get it all wrong. Now, Harry, what if I file my taxes and then I remember 2 days later, I had a big deduction. I was supposed to do.
Or you could have a situation like there's a situation going on right here in Lebanon now where a lot of folks had received their W-2 forms and they were incorrect. So the employer is now sending out corrected W-2 forms. So all those folks that have already filed their return with this incorrect W-2 form, they must now do an amended tax return.
Okay.
And that just entails re-preparing the return with the correct amounts, and you do it on a what's called a 1040X. It tells the IRS or the state of Kentucky, wherever the error is, or both, what the error is, why this filing is being done, and shows them the change.
Okay.
But that needs to be done as soon as the error is found. Yeah.
Okay. Got one more question for you here. Tax debt forgiveness. What do you know about that, Harry? Tell us a little bit. I've seen some advertisements, and I've seen,
tax debt forgiveness. I'm not so sure that really happens. I think the only one I ever know of that I could tell you, Yvonne, that actually had tax debt forgiveness is the old Joe Louis story.
Yeah.
I don't know if you remember that or not. Joe Louis was the heavyweight champion of the world, and he donated all this time to the United States government because he enlisted in the Army, and he went and put on these boxing exhibitions over and over again. I guess it was, I don't remember, 2 or 3 years that he gave to the United States with all these boxing exhibitions, and he was champion of the world. Well, over the years, I guess he got in tax trouble and owed all this money, and the IRS, he's the only one, to my knowledge, that the IRS ever really forgave.
Forgave their taxes.
Right,
Okay,
right.
Fantastic. Well, Harry, thank you so much for coming this evening.
Well, you're certainly welcome.
And answering all of my questions here.
Pleasure was
even
all
the one
mine.
about tax forgiveness, I was hoping, there was a list I could put my name on.
Well, actually,
for that.
Yvonne, there is this little situation, and really not so little, so it shouldn't be something that be overlooked. There is a situation called offer in compromise, where people do owe, if you do owe a ton of money, and it really doesn't make sense. It doesn't look like you can overcome this amount that you owe. The monthly payment that you would owe is excessive, that you would have to pay is excessive. There is an offer in compromise that you can prepare and deal directly with IRS and ask them to consider accepting a lesser amount of payments, and they do and consider that, and they have granted that offer in compromise in many cases.
Okay.
So that does exist out there.
That does exist.
Yes.
Well, I hope I never get to the point where I owe that much money.
I know.
You know what I'm saying? But my lifestyle is pretty small. But again, thank you for coming and talking to us tonight.
Thank
and
you,
answering questions. And if our viewers have questions out there about taxes, they can come in and
Certainly,
talk to
they
Harry.
certainly can.
How can they reach you, Harry?
They feel free to call my office. I'm at 215 West Main Street, and the office phone number is 270-692-5555, and we're there just about 24/7 this time of year.
Yes, I talked to Gina earlier today, and she told me that she'd been there for a while.
Yeah.
But anyway, thank you again.
Thank you for having me.
You're
It's my
very
pleasure.